Good afternoon, traders. It's Bill Baruch from Blue Line Futures, and this is the FX Rundown. Now, again, another quiet session here in the currencies, range bound, but there was volatility overall. You saw the euro try and get out above that major three-star resistance level, 112.70 area, 112.5, 112.70. After U.S. PPI data came in lower than expected, jobless claims came in higher than expected, which is negative for the U.S. dollar. Fed Chair Powell didn't really give anything new. Didn't focus on monetary policy. This really is going to emphasize tomorrow's CPI read. And the CPI is obviously watched much more closely than PPI. And for arguably one of the reasons this week why we've seen currencies remain very consolidated. Obviously, the other reason is U.S. and China trade. Now, President Trump did talk about that there is progress being made between him and President Xi, and that got a turnaround in risk sentiment. You saw the equity market rally this afternoon on that news, and he says there is an alternative to a Chinese and U.S. trade deal. So we'll have to wait to see tomorrow morning before those tariffs are supposed to be implemented at 12:01 Eastern time. So there's going to be news developing. It's going to be headline risk out there. Continue to watch it. And again, that's one of the reasons why currencies have been fairly quiet. The dollar holding above that breakout level I've talked about here every day this week. At late April, 97. It's using that as a floor. And right now, it's going to rely again on CPI tomorrow and any comments on trade. In the euro, that resistance level, but down below you also have support below that 112, and they're both consolidating, so watch that. Now, with immense weakness early on in risk assets such as the equity markets, crude oil and copper and others, you saw the yen escalate higher, follow the treasury market higher. Now, the yen did not get out above major three-star resistance, 91.85, a previous peak, but it is settling out above 91.30, which continues to keep a path of least resistance higher. So watch that yen. But overall, if the risk assets like equities, they are trying to round out a bit. See how they close today and they trade into tomorrow. If there is positive news on U.S. and China trade, ultimately the yen is likely to come back in a bit. So keep a close eye on it. And a close below 91.30 is neutral, but a close below 90 is very negative. And that will leave a very large tail on the week as well and likely give you some follow-through. Now, the Aussie dollar, it's hanging right above a major three-star support level. 70 is that line, and it's just been consolidating. Remember, China is Australia's #1 trade partner, and if something happens where these tariffs get escalated up and they get implemented as threatened, it's going to hurt the Aussie. And you can see about another penny and a half move down to that early January low in the Aussie dollar tomorrow and through the early part of next week. Now, you also have the RBA meeting minutes released tonight. RBA met early Monday. Overall, nothing new from them. They're waiting for trade. That's what really everything out there is waiting to see what the two largest economies in the world are going to do on trade. And for the Canadian dollar, you do have the employment data tomorrow. It's going to be crucial on how that moves the Canadian, but so is the U.S. and China trade, and so is CPI. So a lot out there for the Canadian tomorrow. And it is lingering right at that 74 mark, as it has been, tethered to that as we wait for more details here as the week develops. So stay nimble and be ready for any sort of headline risk and sharp moves across the board. Now, I'll just leave you with this. We wrote about in the Morning Express today that you look back at June, in middle of June, in through late June, the S&P sold off nearly 4% as President Trump threatened to impose new fresh tariffs on China. Ultimately, though, that was supposed to include Apple as well as consumer products, and the fear started to go through the markets. Now, when the S&P bottomed out in through where that was supposed to be imposed on July 6th, President Trump gave a more watered-down version. $50 billion of tariffs was imposed, but it excluded those consumer products. So you saw risk sentiment and risk assets bottom out on that, and then it also aligned with a non-farm payroll report back on July 6th. And at that time, job growth came in very strong. Average hourly earnings was below expectations, and you got another Goldilocks report. Ultimately, risk assets ripped higher. You saw the stock market trade 4% from the low, and it set it on a course for the S&P and others to hit record highs. Now, this aligns up very closely with what we have tomorrow. We're going to get news on trade. What happens? We're going to get a huge CPI number. Is it going to be soft or is it going to be strong? What's it encourage the Fed to do? So stay nimble out there, and we could see a sharp turn in risk assets once again. But if these tariffs come in strong, better watch out. Give us a call. We're here to talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.